Audio is not working.
So we are not talking anything. I have muted everybody.
Okay.
That is why audio is not
Fine,
working.
fine.
Okay,
No,
just
no, no.
hold on. I mean, am I audible now? You can hear me, right?
Yes, sir.
Yeah, fine, good. Okay.
Yes, sir.
Just waiting for a few more minutes for people to join, because we have about 100 registration. So far, only 40 have come. That is the reason why we are delaying.
Yes, sir. No problem. We'll wait.
Yeah, thank you. I think even in YouTube also I'm audible now. Okay, right? So don't worry about it. I mean, we are making sure everything is done correctly. Yeah, good morning, everyone. It's 10:36 now. Catherine, shall we start now, or I think we will start now. By the time we have the introduction and other things, it'll be 10:40. Okay, shall we start, Catherine?
Yes, sir.
Yeah, good. Thank you. Catherine, your screen is frozen. Yeah, no, okay, good.
Good morning, everyone, and welcome to today's session. So, before we start the webinar, I would like to invite Reverend Wesley George.
Catherine, you're not audible.
Yes, sir. I think there is a connection got disconnected, sir.
Yeah. Okay. Maybe Catherine, you can use Graceland's system and then speak. Yeah, now we are okay. I mean, go ahead.
Good morning, everyone, and welcome to today's session. Before we commence the meeting, I would like to invite Reverend Wesley George to lead us in prayer.
Reverend Wesley, will you please open the meeting with prayer, please?
Sure, we'll do that. Let us pray. Gracious God, our Heavenly Father, we want to thank you for this opportunity, a special opportunity for your servants, your leaders, for your people across the nation to come together in this manner, together so that, Lord, we will be men and women who would understand the signs of the age and wisdom of the age. We thank you, Lord, for your people, and we pray that this time that we would spend together would be useful and beneficial time where we will be able to refine ourselves, our endeavors, our work, and you would also give us the needed insights, the wisdom, so that we will always be at the cutting edge and we will always be at the point of excellence, O Lord. We pray that you will continue to give us the needed knowledge, that you would lead your servant as he leads us and he brings in new insights and understanding so that we all are up to date and we all are good citizens who are law abiding citizens. We thank you for bringing us together. We pray that you will lead this discussion in a detailed manner. You will give us the needed guidance, the leading, the insights. And oh, Father, you will speak to each of us. You will make us prudent people, prudent servants of God, prudent leaders who would serve you so that your kingdom can be established together. And we pray that you will bless this effort together. May your name be glorified. In Christ's matchless name we pray. Amen.
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 So, before we start the webinar, I would like to before we commence the webinar,
Catherine, you're not audible at all, Catherine. And your screen is also not getting shared.
One second, sir. One second.
Yeah.
So here I would like to share some of the instructions before we commence the meeting. the first thing would be, I'd suggest that you all mute yourself to avoid any interruptions during the webinar. And the second thing would be, please rename yourself. For that, you have to log in the register name and go to the participants list, and against your name, you have to select more option and you have to rename that. And then please ensure that you switch off the video to get a better quality. We'll be sharing PowerPoint presentations throughout the webinar. And if you have any questions during the session, please post the same in the chat box and we'll answer all your questions in the end of this. Now, to welcome you all, I would like to invite Ms. Gracelyn.
Yeah. Good morning to one and all present here. Glitch that happened here. But greetings to you all in the name of our Lord and Savior Jesus Christ. And it's a joy to welcome you all to this webinar once again this week. And the last week on 20th, we saw about the FCRA amendments and the renewal process and the provisions in the Tamil Nadu Public Trust 2020. So I trust it was useful in refreshing our understanding and about FCRA and learning about the new amendments. So today we'll be
Can you
looking
increase
at
your volume, please? Can you increase your volume?
yes,
is
sir. 1 second, sir.
Keep your mic close.
Yeah, am I audible now?
Yeah, now it is better. It is clear.
Okay, thank you, sir. So today we'll be looking at the various compliances required under Income Tax Act 1961, including the revalidation process for those who are registered under 12A and ATG. And also we'll be looking at the recent changes in CSR and what is its impact in for NGOs. So as we all know that ignorance of the law is of no excuse, and we need to update ourselves to the recent changes and equip ourselves for its compliance. So I'm sure that we'll all be benefited by the sessions which will be taken by John sir and Ms. Menaka and Ms. Monisha. So we appreciate all the questions that you have, and please post it in the chat box and we'll take it up in the end of the session. So once again, I thank you all. I welcome you all to this webinar. So thank you. So over to John, sir.
Thank you. Thank you. Okay, good. Thank you. I'm sorry I've muted all of you so that we can go ahead uninterrupted during this hour and 15 minutes time. I hope I'm audible enough. Am I audible? I mean, for the time being, I will unmute you all so that you can respond. After that, I will mute you all. Am I audible? Can you hear me?
You are audible.
Yes, sir. Yes, sir.
Okay, right. Thank you. Thank you so much. So I will mute all of you so that we will have, yeah, good. So that we can learn. What is the need for this webinar? FCRA, we all can understand because FCRA renewal is there, new bank account, and FC4 filing. There are changes in that. I mean, FCRA renewal, we all understand. Why should we have this income tax compliances? Because this year, during COVID time, audit, even every year, we have been giving management letter to you. And this year also, as a practice, we have given management letter. And I have not seen much improvement with many of your organizations, our organizations. See, this webinar is primarily meant for John and Julian clients. So those of you joining, please be benefited from this. Anyway, we thank you for joining. So not much improvement because we take things for granted. There are TDS non-compliances. There are cash payments above 10,000 rupees. We take things for granted. So we had to, from our office, our admin team would call constantly. There are organizations that brought the books at the last minute. Thank God the dates were extended. Otherwise, many of us would have been in deeper trouble. and we work day in and day out. So I thought I'll have to inform you all people what are the consequences of non-compliances. What will happen if I take things easily? Because what we are going to talk about are there for many years. Of course, there are some fine tuning happening nowadays, but what we are going to talk to you, it's been there for years together. And many of us, we have taken things for granted because all the previous governments never took it seriously. They all were thinking, they all were having good opinion about us. Not that the present government is not having that. They are also, the present team of officers also respect NGOs. That is why, COVID time, government encouraged us and a lot of incentives are being given to us. Okay, government now in the budget 2021, if you have seen, government encourages NGO participation in education, health sector, and all these areas. So government is encouraging us. Thank you. Government is encouraging us, present government also. But then what now is happening is that they are implementing the laws. In letter and spirit. Whatever is given in the law, the government expects us to follow that. So we thought, let us again caution our clients what are all to be done. The last 2 years, 2020 and now 21, there are some changes, in the tax laws. I thought I will explain that to you again. In fact, 2020 changes, we did a webinar, two webinars we did. One from the office, the other one from CIM we did it. And some of you have participated in that. So I thought we will do it again to refresh your mind. And this year, we're not going to have much time. Things are changing. I thought you will, you will understand what is to be done and you'll be careful because days are changing. Yesterday, I was talking to another friend of mine and already some of us, you may be participating in this webinar, have received questionnaire from FCRA department asking to answer about 30 plus questions. And then there is FCRA audit also started now. FCRA department, some places they are going, in many places they are reputing others to come and do the audit. So all these are happening. So it's better that we know what is to be done and how things need to be done. So this is the background for me to organize this webinar. And as Catherine and Gracelyn informed, because their voice was not audible, anyway, I've muted yourself. Please keep your video also, on shutdown mode. Don't switch on your video so that the quality will be better. We'll be able to hear and listen and learn properly. The second thing is that whatever your questions, please put it in the chat box. We'll try to answer. We have put it full day so that we can devote more time for question and answers. Whatever your questions, whatever possible, I will answer. Where I'm not sure, I will get back to you. We'll reply to you through email or in the group that we have created. We will post it. So with this introduction, let me start our presentation. Okay, right. Thank you. What are the learning objectives today? Because we talked about conditions, compliances under FCRA and revalidation. So we are going to learn more on the compliances part of it. What are the conditions for exemptions? Registration, we're not going to go through per se registration process because that is not my idea at all. But revalidation, we will be going through that. And then what is application of income, we'll try to understand. And audit, furnishing of audit report, there are changes introduced last year and that has become effective from last year itself. Applicability of section 40A IA. What is that 40A IA? I'll explain that to you. TDS provisions. In fact, Manaka will take elaborately on the TDS provisions. Then cash payments above 10,000 rupees. We're going to discuss that. Then procedure for renewal, revalidation, fresh registration. We are going to discuss about that. While discussing that, we'll be talking about the losing exemption under section 13. What is that? We will discuss a little elaborately on that. And last year, they've introduced new provision for cancellation. This cancellation provision was already there, but last year they have enlarged the scope. We'll see that. And we'll discuss on anonymous donation also. What is this anonymous donation? What care we should take about it? and tax on accreted income. So we'll be discussing all these things under the Income Tax Act. And Monisha will take you through the CSR. Before CSR, I will tell you why we want to do that. And we'll tell a brief background on CSR, why we are doing this program on CSR. All of us are aware that the difficulty that we face with FCRA, raising funds from abroad. I mean, not because of FCRA, even otherwise raising funds from abroad is not easy now. We are having a lot of difficulties in raising funds because donors after donors are not funding, especially for those of us who are active in South India, Tamil Nadu, Andhra, not much funds are coming. On the other hand, government, 2013 Companies Act brought in mandatory, companies responsibility, what is known as corporate social responsibility. Okay, right? Brought in mandatory responsibility of the company's corporate social responsibility. Monisha will discuss that. And the funds that corporates give, last year and even year before last is almost matching the amount that we raise from abroad, foreign contribution. And sooner it will pick up because government is very serious and sincere about companies involving in the social service. So here is an opportunity for us to raise funds in India from the corporate. So Monisha will tell you about the various projects for which we can raise resources. And I think it is time that NGOs look at India because we have enough resources in India, especially the government is opening up a good avenue. So many of us are aware of that, but today we thought we will give little more information to you on CSR funding so that you can approach, you can make yourself available for that. What is to be done? So we'll tell you all these things so that you can be prepared. That is the reason for us to hold a brief session on CSR also. Okay, right. Now we will proceed with the subject per se. Before we get into further, let's first understand what is charity, because even this also has implications in compliance as part of it. Section 215, we don't really have much good definition of charitable purposes. Section 215 gives us some idea because we are talking about income tax. It gives us some idea about charity. This is an inclusive definition. While explaining about on FCRA, I talked about the means definition, which I said like watertight compartment, closed. Nothing much can be added to that. Whereas inclusive is one where more can be added. I'm going to just show briefly what are all were added by the court as charitable purposes before the amendment came. The charitable purpose includes relief of the poor. I don't need to explain what is relief of the poor. Anything that you do to alleviate poverty is relief of the poor, and also helping the poor people. What we normally understand as charity, the alms, the gifts that we give, the small gifts, is charitable purpose. Educational activity, the schools, colleges that we run are charitable purpose. Yoga, charitable purpose. Okay, medical relief is a charitable purpose. The hospitals, the clinic is a charitable purpose. Preservation of environment, okay, including watershed, forest, and wildlife, is a charitable purpose. Preservation of monuments or places or objects of artistic or historical importance, interest, is also charitable purpose. Advancement of any other public utility. Advancement of any other public utility, also charitable purpose. Ms. Christine Taylor, there is a problem with your connection. It's constantly getting unmuted. Please ensure that, because this is disturbing us. I'm sorry to be naming you, Ms. Christine Taylor. Please, thank you so much for understanding. Thank you. Okay, right. So the charitable purpose definition, as I tell you, is an inclusive definition. There are about 7 areas given here. Okay, so relief of the poor, education, yoga, medical relief, preservation of environment, preservation of monuments, advancement of any other object of public utility. This last one, advancement of any other object of public utility. Let me just see. Yeah. Yeah. Advancement of any other object of general public utility. Courts have held various activities as objects of public utility. Okay, right? If you see that, promotion of business, promoting cottage industries, okay, right? And bar council, export promotion council, export promotions, promotion of commerce and trade. What courts have said is that, if you see this, the expression would prima facie include, I'm sorry. The expression an object of public utility is a widest connotation. That expression would prima facie include all objects which promote welfare of general public. If it is a public at large, if it benefits, courts have repeatedly held that it is an object of public utility. So, as I explained to you, it is not restricted only to the 6 or 7 areas. So courts have repeatedly said. So what happened is in the year 9, Mr. Chidambaram, who was then finance minister, he amended the charitable definition clause, section 215. What he said is that this 215, there's a provision added to that. What he said is that advancement of any other object of public utility shall not be charitable purpose if that activity involves, number one, it is an activity in the nature of trade. Thank you so much. Please mute yourself. Okay. If the activity involves carrying on any other activity in the nature of trade, or you support any business activity, okay, it render any service in relation to any trade, commerce, or business. Okay, if you are directly involved in any trade, commerce, or business, or you support any activity in relation to, or those who are involved in trade, commerce, or business, for a fees, whatever name you call, fees, cess, or whatever name you call, and irrespective of the nature of application, whatever profit I'm making, I'm using it only for charitable purpose. The law says, the amended law says, even if you use the 100% profit from your commercial activity, you will not be charitable. This is only with respect to the last limb, not with the other one. Only with respect to the last limb of the charitable definition, object of any other public utility, not with the other things. Okay, right? So if your activity of object of public utility involves in activity in the nature of trade or commerce, or activity supporting any trade, business, or commerce, even if you spend the entire proceeds for charitable purposes, then you will not be charitable organization at all. So this is very, very, very important amendment which has taken place 2009, and we are now in 2021, more than 10, 12 years past now. But still, many of us do make mistakes here. Okay, right? Once it was amended, people protested, NGOs protested. What they said is that, because in 2009, foreign funding was coming down. We are not getting enough funds. So what people said is that we are not getting enough foreign funding, and we need to have self-generated income generating project. So how do we do that? Earlier, it was possible for NGOs to do through self-help group, do small activities like, you make bags and sell it, or you make some handicrafts, sell it. Or if you're a vocational training institute, you can make some small furniture, sell it. And self-help group, they were mainly involved in microfinance activity. I mean, NGO will promote self-help groups. They will promote about 50, 60 or 100 self-help groups. Through that, they were, helping poor people, small microfinance. It's not a banking business or the NBFC business, non-banking finance company, but in a very small way they were doing it. And what happened after the amendment? Department took a stand saying that what you are doing is commercial activity. Why should we give exemption to you? In fact, there are cases, instances where they have denied exemption and taxed them. Even for microfinance through the self-help group, they have denied that. If your activity is a very small level, some offices took a sympathetic way, approach, and then they said, I will not grant you 80G. You continue with that, but slowly close down your activity. There are some which were involved in a bigger way. Department taxed them and litigations were going on, and when they were not able to be successful. So we need to be careful if you are involved in any activity in the nature of trade, commerce, or business, or we support that. So once when people objected, initially department said, government said, okay, up to 10 lakh rupees you are getting income like this, we will not disturb you. Because anyway you need local funds. So up to 10 lakh rupees if you get, we will not disturb you. But then 2015, the act was again amended. And what they said is that the aggregate receipt from such activity, what activity? You're involved in commercial activity or business activity, or you support some business activity, does not exceed 20% of the total receipt. Okay, right? For example, your income, your donations and all your income put together is 1 crore in a year. Your self-generating, income generating project can be only 20 lakhs, 20%. Okay, right? So this is the limit within which we need to work now. So what is the meaning of this? If you are a small NGO, you are going to have trouble. If we have, thank you. If you are a small NGO, right, and if you also have these IGPs, income generating projects, then you will have trouble because only 20% can be from income generating projects. So my sincere suggestion is that where you have that, see whether you can avoid that. In fact, sometime back, one of our client, they used to have, in their premises, for outsiders and also for their own staff, a small canteen. It was part of the NGO activity. They were selling to outsiders. Now they've stopped that because of all these restrictions. And please remember that charitable definition. But we talked about 7 limbs in charitable definition. Okay, right? Relief of the poor, education, yoga, medical relief. We talked about 7 limbs. Okay, wait, where is that? Yeah, fine. Okay, we talked about 7 limbs. These 6 limbs, if you're having any income from your income generating project, there is no problem at all. For example, school. I am running a school. I collect fees. It is fine. There is no problem at all. I am running a clinic. I collect fees from the patient. No problem. Okay, right? I hope you can understand the reason for bringing yoga here. Yoga, even other ways, was covered under advancement of any other object of public utility earlier. Okay, right? The 7th limb. But by bringing into, a separate activity, now the teachers of yoga can charge fees and still they will be charitable. They need not worry about within 20% of the total income. If you are involved in any other activity, then you should be worried about within 20% of your other income. Okay, so let's get into the other area. In case you want to put your questions, anything in this, I'll give you a minute's time. Please put your questions in the chat box.
I'm Philomena here. Good morning, Dr. Ravinder. Good morning. Can you hear me?
Yeah, good
Can
morning.
you
I
hear me?
can
Yeah.
hear
Good
you.
morning. I just have one question.
Yeah, I mean, my
For
request is that please put it in the
industrial,
chat box so that we'll answer all the questions together. Because if I take questions now, I'll not be able to complete my presentation. Okay, right? Because that is why we request people to put it in the chat box. Type your questions. My team will take it down. At the end, if we are not clarifying, then we will allow you to take the questions. Okay, please, thank you for understanding. Okay, we'll proceed further. Even though I'm talking about conditions for exemption, these are all important. The first condition is registration with the Commissioner of Income Tax within 1 year. I'm not going to talk to you about this at all. Of course, I'm going to deal about amendments in section made last year, where I'll be talking about revalidation, fresh registration, and subsequent renewals also. But I'm not going to explain per se what is to be done for registration, what forms. We are not going to do that. The most important next one is application of income within India. This I'm going to explain. I mean, income tax law for us, for charitable organization, talks about application of income. Okay, right? What it says, what normally say, I mean, section 11(1)(a), in fact, repeatedly we read that, it says that income derived from property held under trust only for charitable or religious purposes, to the extent such income is applied for such purposes in India. Okay, right? Such income is applied for such purposes in India. We use the word here, income applied for purposes in India. What are the purposes? The purposes can either be charitable or it can be religious purposes, depending on your trust deed or memorandum. If a memorandum is religious, then your activities will be religious. If a memorandum is charitable, your activities will be charitable. So you need to carry on the activities or the application of income meant to be done as per the objects of the organization. And they also use the word purposes in India. Okay, we will take that little later. So income tax law says that you need to apply the income. They are not talking about expenditure here. If you take businesses and section 37, which talks about businesses, it talks about business, how they are to do that. And they say that expenditure incurred exclusively for the purpose of business or profession alone can be allowed. Capital nature will not be allowed. Personal nature will not be allowed as deduction from your income. Okay, right? Let me repeat again. In case of a business people, whatever expenditure that you're spending exclusively for the purpose of business or profession, okay, right, will be allowed. If you are spending on capital expenses, that will not be allowed. Only depreciation you can claim. If you are spending personal purposes, that will not be allowed. Let's take the example of myself. Okay, I'm running a chartered account office along with Julian and Sudha. We are running a chartered account office. And I travel. I use my car for traveling to office, meeting clients' place. And I also use the car to go to churches. Sometimes, of course, last 1 year we have not taken. Sometimes I take my wife and my daughter outside also. We use that car. What the income tax law says for businesses then, I can only charge the diesel or petrol for office purposes. Where I go for church, or where I take my wife to the school, or when I use the car for my meeting friends, that expenses should not be charged to business.
John,
Same
sir, I'm
thing.
sorry for interrupting. Many people are finding difficult for to see the screen, sir. The screen is not being shared. It's getting stuck in one PowerPoint.
Oh, I'm sorry.
One slide less struck ஆயிருக்கு, sir.
Okay. I'm sorry. Why this is happening? It should be coming. Are they able to see this? I mean, please unmute yourself and explain, please. Can you see the screen now? Application of income?
No, sir.
It only shows what is charity.
We are in learning objectives slide is showing, sir. That slide is being shown.
No,
But my connection is
What is charity is being displayed?
my connection
I
is
can
good
see
actually. Anyway, I'll stop share and then I'll again screen this. Is it being shared now? Screen?
Yes, sir.
What is the screen now? I mean, you're seeing now?
Application of income.
Yeah, I mean, the other participant, can you see this now?
Yes.
Yeah.
Yes, sir.
Thank you. I'm really sorry. I did not realize that. I'm sorry. In case you have any problem,
Now
please
we can
unmute
see.
and then tell me.
Thank you.
Okay, thank you. I'm sorry. Dr. Philomena, I'm really sorry. You possibly wanted to say me that. I'm sorry. Okay, let me, go back and explain application of income. Anyway, I'll be sharing all the PowerPoint presentation, not only today's, even FCRAs and the Tamil Nadu Public Trust Bill and CSR, TDS will be sharing with you all. Okay, right? Even those who are attending in YouTube, you will get that. All the registered participants will get these PPTs. Okay, right? So income tax
problem.
law for charitable
No problem.
purposes. Thank you so much.
YouTube, anybody can see, no idea.
I'm muting all. Whenever you want to speak, you can unmute and then speak. Okay.
YouTube live.
Thank you. Thanks, Mr. Javis. Thank you. Income tax law for charitable organization talks about application of income. Okay, it talks about application of income for charitable or religious purposes. Okay, right? Application of income. Let me take the bigger one. Okay. Good. Okay. Right. Application of income, then we'll come to the in India. Okay. First, it talks about application of income. Okay. Such income applied in India. Unlike the business, it says that exclusively for the purpose of business. It should not include capital. It should not include personal. Okay. I explained personal. It should not include capital. Supposing in my office, I buy computer. Recently, I bought a laptop because this present laptop suddenly created problem. I was so scared. So I bought a laptop. What I can get maximum, because I bought it in the second half year, I can only get 50% of the depreciation, not 50% of the depreciation allowed in the income tax law. Okay, right now I think it is 60%. So I'll get only 30%. But for charitable purposes, charitable organization that have 12A, whatever income you're applying for your charitable purposes, they are not using the word expenditure. Whatever income you're applying for charitable purposes is allowed as application, is allowed as deduction to you, which means that all your recurring and revenue expenses is allowed as main deduction. All your capital expenses is allowed as reduction. I talked about computer personally. The same computer, you buy it for organization, in your organization, then it will be allowed as application to you. You buy a vehicle. Supposing, let's say you buy an ambulance for your clinic, it will be allowed as application, 100% will be allowed as application. Okay. You construct a training center, allowed as application to you. You buy a piece of land for rest house for the missionaries, it's allowed as application. All these are possible. In fact, till about 2 or 3 years back, courts have allowed even depreciation on assets as application. We not only get 100% assets allowed as application, courts have allowed us to claim depreciation also as application for us. Okay, right? So this is the one. And then there is repayment of loan is also allowed as application. In 21, this year, there is a small amendment in that. So I will take that main repayment of loan when I talk about current year's amendment. Okay, right? Which is in the bill stage. We'll take that. Transfer to another trust is also allowed as application. Supposing I give donation to another person, or to a professional or to somebody, if I give it as a donation, I don't get any deduction. If I pay as a professional fees, I may get some deduction. Okay, as long as it is for my office. Whereas a charitable organization, you pay from one organization to another organization, that is allowed as application. But anyway, please, those of us who are with us, please consult me before doing that. Anyway, I'm happy that you're doing that. Others, please check with your CS before transferring from your organization to other organization, because in FCRA, we talked about there is absolute ban on transfer of foreign funds now. Even other funds, when you're transferring, you have to make sure that similar objectives are there. All these things, you have to ensure that. So while applying, make sure that you are applying for these purposes. Okay, right? If you are not applying for this purpose, you may run into problem. We are going to talk about when you are not applying for these purposes. The second one is that your activities have to be within India only. You cannot have activities outside India. There are some mission organizations participating in this webinar. We are over enthusiastic because the word of God says, go and preach the gospel all over the world. Okay, right? So what we want to do is that we want to start our activities in Africa. We want to start our activities in neighboring countries. Especially we want to go and preach gospel in Nepal, Bhutan, because we have missionaries in North India, close to that border. So the temptation is to go there and share the gospel. Please note that income tax law does not permit you to have activities outside India. Even FCRA also has restrictions. We are not allowed to use funds outside India. So you have to be very, very careful dealing with this. I don't have much time to explain my experiences on these things. So I'm going back to the other one. And this also we have covered it. The third one is that the benefits should be available to all. You cannot have any restrictions on beneficiaries. This again, we will talk a little more elaborately when I take section 13(1)(b). I will go through this quickly. The next one is on winding up. The net surpluses should not be, pocketed by or should not be shared by author, manager, or transfer, but it has to be transferred to another organization with similar objective and also having 12A registration. From now onwards, it's going to be 12AB. We'll talk about it a little later. Okay, so this is not a business. In a business, supposing we have a partnership now, myself, Julian, Sudha, we are partners now. God willing, there may be others joining with us. Tomorrow, I decide to quit or we decide to dissolve. And what we do, we value our assets and look at our liabilities. After discharging all the liabilities, whatever surplus is there, the 3 of us or 6 of us will divide amongst ourselves, or 10 of us will divide among ourselves. But that is not the case for the charitable organization. What the law says is that in case you're winding up, okay, you cannot pocket, being the author, being the founder, being the trustee for many years, I've sacrificially served, nothing like that. Whatever surplus is there, it has to be given to another organization with similar objective. And no personal gain. This also we'll talk about little later because these are all needing a lot of explanation. We'll talk about little later. Investment in specified assets. This, I will share the list for you. You can invest in that. Audit of accounts and audit report in Form 10B, to be filed by 30th September. This year they gave us time till 15th January. And I noticed that some of you come for consulting, you have not filed it by this due date, even by 15th January. Let's pray that government gives a condonation for delayed filing. Let us hope and pray that, okay, right? And tax filing to be done by 31st October. This is the normal date. But this year, because of COVID, they gave time till 15th February for us to file the returns. And I've seen some of you have still not filed. Please file that. We're going to talk about the consequences of not filing this Form 10B and also for not filing this tax returns. We'll be talking about it later. Okay, right? I'm just giving you a few minutes time for you to write your questions, if any, on application and also activities within India. Because the rest of the thing I'm going to explain it later. I'll give you 2 minutes time. Please put your questions in chat box, okay, right? Okay, is my screen visible to you? You can unmute and respond.
Yes, sir.
Yeah, thank you. Thank you so much. Thank you. Okay, right. What if I am not able to apply this 85? What if the law says is that we need to apply our income, and normal expectation is that we need to apply the entire income. But income tax law provides that you need to accumulate, you can spend about 85% of income, and 15% you can accumulate for future. Okay, right? So it's not necessary that you should spend the 100%. You can accumulate 15%. This is the maximum you can accumulate. Okay, right? What if I am not able to spend the accumulation for specified purposes? I'm not going to deal it today. If time permits, then in the evening we will see that. Okay, right? If time permits, because we have a more agenda, but I'm sure I will have little time to explain this. When the time permits, I will definitely take you through. Corpus donation, because of the amendment, we are going to talk about it. Capital gains also in the evening, if time permits, we will discuss that. Okay, because you may need a little clarity on corpus capital gains also. Okay, right, fine. We'll talk about it. All these option under section 11.1 accumulation, we will talk about it in the afternoon if time permits. Okay, corpus donation, I'm taking it to the amendment site in the afternoon. We'll take it. Okay, right. Okay, now comes the next one. What are the complaints as part of it? There are couple of business clauses. We call this as business clause because section 28 to section 44 is a business section, okay, right? Because if you see the income tax law, the income is taxed under different heads. Okay, income is taxed under different heads, and the salary head, income from salary is one section, section 14 to 17. Then comes income from house property, then business income, then capital gains, income from other sources. And charitable organizations are not covered under any of these heads of income. We are an exempted category. That is why we are clubbed under exempted income. Section 10, 11, 12, and 13 are exempted category. So we are covered under section 11 and also section 10. And repeatedly, many offices, tax offices used to say, you are running charitable unit. Income tax law requires that you should deduct taxes at source. You're not deducted TDS. So why I should not disallow your application? And repeatedly courts have said these TDS provisions are not applicable to charitable organizations registered under section 12A, 12AA earlier. Now it is going to be 12AB. Similarly, payments in cash. Department said, department used to take a stand. Officers used to say, yeah, making payment in cash, about 10,000 rupees in cash. Earlier it was 20,000. You are making about 20,000 rupees in cash. And why I should not disallow? Courts have repeatedly come to our rescue and said, this is not applicable because they are exempted category. They are not part of your regular income. They are exempted category. So these provisions are not applicable. But unfortunately, a couple of years back, these sections were amended. By way of explanation 3, what they have said is that for the purpose of determining the amount of application under section 11(1)(a) or B, provisions of section 40A IA, section 40 capital A will apply. You don't worry about what is all those sections 40A, IA, 40 capital A. Don't worry about all these things. Okay, right? We're going to explain all these things to you. What in simple terms it means is that if you are making payment in cash about 10,000 rupees, then you will be paying taxes. You will not be allowed as application. If you're not deducting TDS, tax deduction at source, if you're not withholding taxes and remitting to the government on payments where TDS is applicable, then that part of the main application will not be allowed. Okay, so we are going to talk about it a little more, and then we are going to see that elaborately also. Let me take first 40A and 40A3 and 40A3A, capital A. What is 40A3 says that where an assessee, where an organization incurs expenditure and the payments are made for such expenditure other than account payee cross check or through electronic clearing system. They are using the very word account payee cross check. Many times we say that I am making payment by checks only. I use only simple crossing. There are different crossings are there. Many of us, especially my father, for him crossing means on the top left-hand side of the checkbooks, draw 2 lines, parallel lines. That is crossing. Now that is not the crossing that government wants. They want to write account payee only or payee's account only. Or still further, non-negotiable. You have to say that. Otherwise, all this, if it is not account payee, even if you make a simple crossing, the recipient can endorse this check and give it to somebody else. Okay, so government wants to track, your payments. So you have to make account payee cross check. And right now, the government promotes cashless. They want to make sure that because of large black money, government wants to reduce all these things. So they encourage organizations to go in for cashless. So they say that you'll have to use electronic clearing system. You use NEFT. Earlier, the banks were not encouraging or not allowing organization to have this, net banking facility. Today, when you are opening bank account with State Bank of India, New Delhi main branch, They are even encouraging us to get this non-net banking facility. The reason is government wants us to go for digital banking. So you have to make payment only by account pay cross check or through NEFT or through any other basis other than cash payment. Open check or simple crossing check is as good as cash payment. And payment in a day can exceed only 10,000 rupees. Okay, this is for a particular payment. For example, you are buying, let's say, stationery, printing papers. You want to buy A4 size papers. You are buying in bundles for your organization needs. So what you are doing is that you are buying, and the shopkeeper has given you a bill for 15,000 rupees. And when you go to the shop, he says he will not accept checks, he will not accept drafts, he will not accept credit card, and he says you have to make payment in cash only. So what earlier, few years back, what people used to do is that they used to get 2 receipts from the shopkeeper. They will ask him to give 2 receipts, one on the same day, give one number, receipt number, let's say receipt number 1 for 9,000 rupees. After a few numbers, maybe about 15 numbers, give me another receipt for 6,000 rupees. So the total 15,000 rupees. This was complying. But later the law was amended because people are abusing the provisions. The law was amended. They say that cash payment in a day should not exceed 10,000 rupees for a particular payment. So you'll have to be very, very careful because a lot of us are still making payment in cash. Let us not try to give reasons for making payment in cash. We can all find many reasons for giving payments in cash. I can only tell you where there is a will, there is a way out for us. If you are determined not to make payment in cash, you cannot make payment. You will not make payment in cash. They are participating in this webinar. I can tell the name also. Sashi, Social Awareness Society for Youth. They are based in Dindivanam. Because most of our participants are from Tamil Nadu, Dindivanam. It's a very small town close to Pondicherry, about 40 kilometers. It's not a big town. Today it may be a bigger town. I'm talking about 25 years back. I went there as auditor. First year, I was appointed as auditor. After the audit is over, for review, as usual, I sat with the director, Dr. Ramesh Nathan, and I told him, that time it was Mr. Ramesh, I told him, Sir, Mr. Ramesh, you are making payments, large payments in cash. I hope Dr. Ramesh and Sashi team will not object because I'm giving a good illustration. You are making large payment in cash, Mr. Ramesh. You have to move into account pay 25 years back, or you should pay only by drafts. Mr. Ramesh laughed and said, John, what are you talking? I'm in a very small town. Dindivanam, very few banks. And many of us, many of these shopkeepers will not even have a bank accounts. And I'm having projects. At that time, they were having projects, Tamil Nadu, Karnataka, and small, very few projects in Kerala. And how do you expect me to transfer to that projects? In those days, utilization bank account facilities were all not there. These are all not practical, John. So let's look at practical way of doing things. Then because they applied for a funding from a donor, they sent 2 other consultants. One happened to be a chartered accountant, other one happens to be a good group. And both of them insisted that you must go in for banks, drafts, online facility, not online facility. Those days online was not there. You must issue bank drafts. So what Ramesh did is that at that time he had a good accountant also, Mr. Ganesh. So Ganesh went to the bank and spoke to the branch manager. Mr. Ramesh went to the branch manager and met and talked to them. And the branch manager saw their sincerity. And he appreciated and said, Sir, I have some little discretion. So what I will give you is that from the bank charges, I'll give you some concession to you. I cannot give you 100% waiver. I'll give some concession to you. You take drafts and send it. So those days, 90 to 95% of their payments were by drafts only. Hats off to them. Many of our organizations are finding it extremely difficult to raise funds today from donors. but not Sashi. They still have donors coming to them saying that, will you execute project, this project, that project? They do have challenges, but not like others face. It is because of the determination of one person, Dr. Ramesh, and the team supporting him, they were able to do it in a smaller tone. So please, a honest request, please make sure that you're making payments above 10,000 rupees in by way of account pay, cross check, or by drafts or net banking facilities. There are mission organizations participating in the webinar. You have all excuses. Please, find ways. In fact, I can tell you another good example of AsiaNet. This was in early 90s when AsiaNet started. They were shooting it in remote villages in Kerala, where there were no catering facility, but they had to take the team and do that. I told them, you must have to make payment by checks only, account pay, cross checks. And they found a way to do that. And if you want to do that, you can also find a way to do that. We are going to have challenges. What is the way out? One more organization, when I talked to them, what they did is that they do a lot of training. They talk to the hotels, they talk to the halls, they talk to the caterers. They were not sure how many participants would come. So they would transfer about 90% of the payment in advance to the service provider by way of online transfers. Balance 10%. If it is less than 10,000 rupees, settle it in cash. Otherwise, make the payment by online, because the service provider knows that they are getting the money. They have already got 90%. They've seen the people participate. They see the organization doing the program. They get the confidence. So you can do that. It is not going to be a big difficulty if you plan things in advance. So please plan and do things. Okay, right? I still have some more time. So let me take through 40 IA. This is on TDS. What it says is that there are payments, chapters 17B. Manaka will take you through the various sections and other things. You can understand that. Okay. And you are expected to deduct taxes at source and remit within that particular time. And not only that, you're expected to file the return also, TDS returns. If you don't do that, if you fail to do that, 30% of the amount, 30% of the amount on which tax is supposed to be deducted and you're not deducted will be disallowed as application. So let's say you're constructing a church building, you're constructing a school in a village. Okay, it's a remote village and you found somebody who can do it. What you do is that you transfer money to him every month, or every periodically you transfer money to him, 1 lakh, 1 lakh, 1 lakh. And the church cost is, let's say, 10 lakh rupees. And you transfer 10 lakh to that particular person, a contractor, and you're not deducted taxes at source. It's a simple construction. And what the law says that in case of contract, the TDS rate is only 1%. Till March, it is going to be 0.75% because contractor is individual, provided he has a PAN. And what is 1% of 10 lakhs? 10,000 rupees. You'll have to deduct 10,000 rupees from this 10 lakhs and remit to the government. So you should pay only 9,90,000 to the contractor, 10,000 rupees to the government, and remit the taxes. And because you have not done this 10,000 rupees, you know what will be the disallowance for you? On 10 lakhs, 30%, 3 lakhs will be disallowed. And this year in tax return, last year also it was there, but somehow, we escaped. This year in the tax return, the payments on which you're not deducted tax, the payments of which you made in cash are not allowed as application at all. Because we talked about earlier, you can allow to accumulate 15%, presuming you spend entire 100%. And this disallowance, because of cash payment, non-deduction of TDS is, let's say, only 5%. But this year's, in fact, I have made few of you to pay taxes because you have not deducted taxes at source. It's not a large amount. I made few of you to pay. And this is what will happen. There are organizations, and I'm sure are participating. You're taking a huge risk of not deducting TDS and not remitting it. Okay, so please ensure that you're deducting and remitting, because the TDS quantum is very minimal. Your contractor will not have any objection if you talk to them. Please educate your team, educate your staff, educate your missionaries, your workers, and tell them that this is mandatory. Okay, right? And there is a small way out, okay, for you. What is that? In case where you have genuine difficulty and the service provider, they are remitting taxes on the gross income, and they are including even this income also. Take for example, some of us have, are telecasting our program, in various channels. And what we do is that we make payment only by account pay cross check to these television channels, or whoever is doing it on our behalf. Sometimes we do it through an agent and we make payment to them. We have not deducted taxes at source. What you can do is that this is only a way out, but this is not the solution I'm giving you. In fact, my clients, we are not suggesting the solution at all. Okay, we are not suggesting the solution. Please anyway avoid doing this. We are suggesting, what is the solution? You can get a certificate from their CA that they are furnishing returns in form 26AA, and this 26AA needs to be filed. This 26AA needs to be filed with the tax department. Until you file this 26AA, you'll have to pay interest. Okay, right? Because there will be interest component, you'll have to be paying this interest also. But this is there is a lot of steps to be followed. I'm not explaining because I am not encouraging you this at all, but I'm just giving you a way out for you where you have genuine difficulty. But I honestly do not see any difficulty in this, because in our office, we are giving you complete support. We have Mr. Kanyappan, who constantly bothers you after the quarter, saying that please give me details, please give me details. And where you are deducted, where you deducted lesser amount, he will call and tell you you have deducted less amount, please pay the balance. Sometimes when you are not able to pay, I have paid on your behalf and we help you on this. So, but I'm not suggesting this solution. I am not suggesting you this, but keep it in mind in case, where for genuine reason you're not able to do that, there is a solution available to you. Okay, right? With this, I'm closing, the morning session, but there is 2 more minutes or 3 more minutes for you to put down your questions so that we can take it up after the session. All TDS related questions will take up immediately after Menaka completes a presentation. Okay, so I give you 2-3 minutes time for you to write down your questions. Thank you. Thank you so much. Direct line
We'll go for a 15 minutes break. Kindly come back 5 minutes before the session starts and please do not log out. I hope everybody are back. So the next session will be taken by Ms. Menaka and she'll be taking us through the TDS compliances. Over to you, Menaka.
Hello, good afternoon to everyone. I hope I'm audible to everyone.
Yeah, yes, Menaka.
Yes, Menaka.
Thank you, John sir, for giving me this opportunity. I'm going to discuss on the topic TDS. Now, even TDS is applicable to trust, organized NGOs, everybody, society. So we'll have before entering into the relevant TDS section, we'll have a brief introduction about what is TDS. TDS stands for tax deducted at source. Am I audible to everybody?
Yes,
Yes.
Thank you. Okay, before entering into relevant section, we'll discuss about what is TDS, basic introduction about what is TDS. So TDS stands for tax deducted at source. Any company or person.
You're not audible, Menaka.
You're not audible, Menaka.
Unmute, madam.
Menaka, unmute yourself. Yeah.
Now I'm audible?
Yes, please.
Okay. Okay, from first I'll start. TDS stands for tax deducted at source. As per Income Tax Act, any company or person making a payment is required to deduct tax at source if it exceeds the threshold limit. We look into the threshold limit by discussing the relevant TDS and at the rate prescribed by tax department. So some examples I have noted down here. What payments attract TDS? The first is salaries, interest payments by bank, not by us. Bankers will deduct TDS. This also I'll be discussing later. And commission payments, rent payment, consultation fees, professional fees. These payments will attract TDS. And then TDS is also one kind of advance tax. If the deductor deposited into deductors should deposit with the government periodically by filing their returns on timelines, then only the deductee will get refund the deducted TDS if he is eligible after filing the returns. By deductor side, we should deposit the deducted TDS to the government and the details of same has to be filed by filing TDS return by quarterly. So now we'll move on to applicable TDS sections. There are many TDS sections, but I only listed down few applicable sections for NGOs. So first one is section 192 TDS on salary, 192A TDS on payment of accumulated balance due to employee, 194C TDS on payment to contractors, 194H TDS on commission or brokerage.
Madam, can you go a little slowly so that we can note down certain?
Sure, sir.
Menaka, you can proceed, Menaka, but go a little slowly. Okay, right?
Okay, sir. For few minutes.
No problem.
First section is 192 TDS on salary, 192A TDS on payment of accumulated balance due to employee, 194C TDS on payment to contractors, 194H TDS on commission or brokerage, 194I TDS on rent, 194IA TDS on payment for transfer of certain immobile property. 194J, TDS on fee for professional service. This is just a list of applicable TDS. I'll elaborate each and every TDS. And then 194A, TDS on interest other than interest on security. 194N, TDS on payment of certain amount in cash. Sorry for the disturbance. Please hold on some time. The first section is 192 TDS on salary. Now I'm audible and even screen also visible, no, for everybody. Can anyone confirm, please?
Yes, Menaka.
Yes.
Your voice is jarring.
My voice is breaking.
Jarring. Yeah.
My internet is some. Catherine? Can I proceed with this, sir?
Yeah.
Yeah.
Yes, please.
My voice something jarring, they said. No? Now it is
Yeah,
fine?
it is fine.
Thank you. So first section is 192 TDS on salary. Who's responsible for deducting TDS? Now every person who's paying income chargeable under the head salary is responsible for deducting TDS. How they'll deduct TDS now? At the average rate. For this is a special section which doesn't have a flat TDS rate, only average rate. Average rate is calculated, tax should be calculated on the total income and should be divided by total income. You will get the average tax rate. For calculating this tax, we should know the applicable rates prevailing in the assessment year 2021. Sorry, 21-22. So here are the list of tax rates. This is not TDS rates, a tax rate for calculating average tax that should be deducted from a salary payment. So this is the first financial year they introduced option to pay under new tax regime. This is a new financial year. We introducing option to pay under new tax regime. By looking into this table, we can understand slab rates, which is in the new tax regime will be lesser than the existing one. Hello. Is my voice okay? Is my voice is okay now?
Yeah, better.
Okay. Background noise is disturbing. I don't feel any noise. Shall I continue?
Yes, Menaka.
Okay. So this is the first financial year they introduced new tax regime. By looking into the tabular form, you can understand the new tax regime rates will be lesser than the existing one. But the one thing is, under the new tax regime, we won't get any Chapter 6A deduction and other deductions. But under the existing, as usual, you'll get Chapter 6A deduction and HR allowance and everything. So, which is economical to the which is beneficial to the assessee, it depends on each assessee. So, based on my analysis, I made a analysis which regime will be beneficial. Under the old regime, high income earners will be beneficial. Those who are made more investment in tax saving scheme, then who are paying EMI on housing loan, education loan, then who are paying tuition fees, insurance claim, mediclaim and all, old regime will be beneficial to that assessees. And middle class taxpayer who making less investment in tax saving scheme, who are not paying any EMI like housing loan, education loan, and they not made any Chapter 6A deductions like insurance, tax saving bonds, and so on. For them, new regime will be beneficial. For each assessee, the regimes will be, which regime is beneficial differ from each assessee. So which is beneficial to them, we should work it out and then only know. Based on this only, we'll calculate average tax rate. Okay, when should deduct tax when should deduct TDS on section 192 now? When you're paying salary, at the time of payment of salary, we should deduct tax. While this is a special section, we should look into other heads also. The employees will give the details of other income like interest, rental income, and TDS deducted on such income. And even if any assessee is paying insurance, loan on housing, if any assessee is paying even interest on housing loan or principal amount of housing loan and all, we should consider for calculating average tax rate. What are the details now? Particulars of such other income, particulars of any tax deducted under any other provision, loss if any. Particulars of such other income means interest income, rental income, and for interest income, banker will deduct TDS, and for rental, the tenants will be deducting TDS. So that details also we should consider for calculating average tax rate. That means for calculating TDS. And if any loss under income from house property also we should consider. And all the employers are required to have certain evidences of proof for giving claim under variance exemptions. CBDT particularly mentioned to have the following evidences for the claim made by the employees. The list is up. For HRA allowance, you should have a rental receipt, rental agreement. And for when you're filing TDS, these details also will be asked: name, address, span of landlord, where the aggregate rent paid during the whole year is more than 1 lakh. For that, for persons who are paying more than 1 lakh, they have to produce the name, address, span of the landlord. And we should have other evidences also like rental receipt, rental agreement. The persons who are claiming leave travel concession or assistance, they should have evidences like travel ticket, hotel bill. This is a government even announced leave travel concession cash voucher for this during this COVID season. So that time, if they are if they are remitting, cash voucher, if they are using that cash voucher, invoice copies of purchase of goods or services also. This is only this evidence invoice copies for purchase of goods or services only for cash vouchers. And the normal leave travel concession or assistance evidence is only travel tickets and hotel bills. Then deduction under Chapter 6A, you must get insurance copy, FD receipt, fee receipt for claiming tuition fees, loan certificate for claiming principal on housing loan. And for deduction of interest under income from house property, you should have interest certificate from lender. These evidences the employer should obtain from the employee for giving the claim under the various natures. Then if it is while calculating the average rate, it's quite possible for the employer to increase or decrease the tax deducted to cover the previous deficiency or surplus. While calculating the average take, it might possible, the estimate won't be actual, so it's for employee can even increase or decrease the average tax rate as proceeds. So my first section is over. Anyone has a doubt on this, please put in the chat box. Can I move on to next section?
Yes, Menaka.
Okay, look at that. Okay, next section is, anyone has doubt? Okay, next section is section 192A, TDS on payment of accumulated balance due to an employee. This mostly EPF will deduct TDS for, sometimes even they organize employer also to deduct TDS. If suppose employee is withdrawing accumulated EPF balance than 50,000, we have to deduct 10% on their premature. Okay, this is a very small section. Shall I move on to next section? Section 194C, which is a vast section in my presentation. TDS on payment to contractors. And under 194C, what are the payments covered? No? Any sum for carrying out any work, including labor work, is payable under pursuance of contract. Contract is not necessarily written. It can be also oral contract. There is no need for the written documented evidence for the contract. Even oral contract also this TDS will attract. And who are the person responsible for making TDS? No? It includes even the society and trust. Not only these two people are responsible, all others also responsible. I just made it even society and trust particularly responsible for deducting TDS under 194C. Then what rate now? If the contractee is an individual or HUF now, 1%, others not 2%. During this COVID, the government has reduced 25% of the 25% of the TDS rate. So 0.75 during this period alone. Once they cross 31st March now, the old rate will be applicable, and 1.5% during 14/5 to 31st March. And timing of deduction is either at the payment of, either when we making a payment or credit. Credit in the sense, some NGOs will follow mercantile system. So at the time of credit also, it is necessary for deducting the TDS. Not only necessary, actual payment should be. Then what kind of work attracts TDS now? Advertising, broadcasting and telecasting, including production of programs for such broadcasting or telecasting, carriage of goods or passengers by any mode of transport other than railways, catering work. This is a big one. Manufacturing or supplying a product according to the requirement or specification of customer. by using material purchased by the customer. So any product which is manufactured or supplied according to our necessity or specification, that means a customer specification, now 194C attracts. I'll explain what types of payment will come under this one. And threshold limit is 30,000 for single payment and for 1 lakh series of payment in a whole year. In a whole year, if you pay less than 30,000 each payment, but it cross on aggregate basis more than 1 lakh, now you should deduct TDS for all the payments. Then, okay, and this is clarification on invoice value. If in the invoice value, the material value also mentioned, no, they no need to deduct TDS on material value, only the labor you can deduct TDS. Then if material value is not mentioned separately, now on whole invoice value, we should deduct TDS. Okay. This is a major point. The words any sum for carrying out the work only qualified by is not qualified the phrase or chargeable to tax. Some contractors may inform us that we are not having much income, we are not eligible for paying tax, or we're not eligible for filing returns. Everything they'll be saying, so we should not entertain that one, because they mentioned in section any sum for carrying out work only they mentioned. They didn't mention chargeable to tax under this act. So though contractors are not eligible for filing returns or they don't have any taxable income also, we are liable to deduct TDS. Payments made under service contract are outside the ambit of section 194C. So if I'm making payment to hotels for various facilities provided by them as not within the ambit of section 194C. Then GST component, we no need to deduct TDS on GST component. Only the work which they're making payment for, the work they have done, only we should deduct TDS, not on the GST component. Then some of the examples which covered under 194C are payments made under contract for construction, repair works, renovation, alteration of building, then payment made to couriers, and payment for processing goods supplied by the payer, for which ownership of such goods should be remained with the payer, that means by us. Then not covered, some payments are not covered under 194C is payments made for serving food in the restaurant. In the norm, this will be applicable for the persons having restaurant. For them, restaurant owner paying a food to paying amount to server will not attract 194C, and we making payment to travel agents will not attract 194C, and travel agent making payment to airline companies will not attract 194C. Okay, my 194C section is over. Anybody has doubts can put into chat box. Is my speed is okay? Anyone can confirm, please.
Yes, Menaka, it's okay.
Wherever necessary, if you could give some example, it will be useful.
So I made a list of the payments also, so see. These are the examples which attract TDS. So what type of payments will attract TDS? I made a list. And which is not covered under 194C, I made a list. Can I move to the next section?
Yes, Menaka.
Can I move to the next section?
Yes, Nilata.
So next section is section 194H, commission or brokerage. First, see what payments covered under this now. Commission, not being an insurance commission or brokerage, is covered under 194H. TDS rate is 5%. During this COVID, it is 3.75%, and threshold limit is 15,000. Timing of deduction is at the time of credit or at the time of payment. At the time of credit or at the time of payment, whichever is earlier. I'll explain what is commission. Commission includes payment received or receivable directly or indirectly by a person acting on behalf of another for the service rendered for any service in the course of buying or selling goods in relation to transaction relating to any asset, valuable thing. Commission or brokerage are paid to a person who is acting on behalf of other. For that type of payments, will have TDS under 194H. I'm done with this section. Shall I move to other section, or can I move to other section?
Yes, Nilata.
Next section is 194I, TDS on rent. The payment covers any income by way of rent is covered here. Threshold limit is 240,000 per year. And in respect of co-owned property, threshold limit should mention in section 194I for non-deduction of tax at source shall apply for each co-owner separately. Co-owner means one property is owned by one or more owners are known as co-owners. For each owners, 240,000 we should see separately. Then timing of deduction is at the time of credit or payment, whichever is earlier. TDS rate is 2% for use of machinery or plant or equipment, 10% for use of any land or building or furniture, 10%. During this COVID, 1.5% for use of machinery or plant, 0.75% during for use of building or furniture. Then okay, we'll see meaning of rent. Rent means any payment by whatever name called. It can be lease, sublease, tenancy agreement, or other agreement for arrangement for use of land, building, machinery, plant, equipment, furniture, fittings. Whether these are not owned by the payee is also which also attract TDS. Okay. If the deposit received by the landlord is refundable, there's no need to deduct TDS from such deposit. If deposit is not refundable, it will be against the future rental payments. Now we should deduct TDS. It will be treated as a nature of advance rent, and municipal tax borne by tenant, we should not deduct TDS on that. It does not form part of rent. I guess I'm done with this. Those having any doubts can put in the chat box. Can I move to the next section?
Yes, please.
Yes, Manaka. Yes, Manaka.
So next section is TDS on purchase of immovable property, section 194IA. What are the payments covered, consideration for transfer of any immovable property. If in case we purchase any immovable property, now we should deduct TDS. That property should not be a agricultural land situated in the rural area. Threshold limit is 50 lakhs. If you are paying consideration for more than 50 lakhs, TDS will attract, and TDS rate is 1%. Then timing of TDS, now at the time of credit or at the time of payment, whichever is earlier. Time limit for remittance of TDS. This is a special section where we pay, deductor doesn't require any TAM for deducting TDS under this section. So time limit for them to remit the TDS is 30th from the month succeeding the month of deduction. If suppose if we are deducting on 15th August now, before 30th September we should remit the TDS. And some clarification is, suppose we are purchasing jointly the immovable property, persons jointly purchasing immovable property shall deduct TDS if the consideration put together is 50 lakhs or more. Suppose if myself and my friend is purchasing an immovable property, each 30 lakhs now, by individually it's not cross 50 lakhs, so we no need to deduct TDS, but it's the wrong point. Put together it will be 60 lakhs, it will crossing 50 lakhs, so we should deduct TDS. And next one is the 50 lakh threshold limit should be seen for actual consideration, not for the stamp duty value. Those who are purchased immovable property, they will be knowing the stamp duty value. So we should not compare the threshold limit with stamp duty value. We should compare only with the actual consideration what we are paying to the person. Then threshold limit of 50 lakhs is applied in respect of each and every property purchased separately. If suppose I am purchasing an immovable property along with the movable assets, now threshold limit of 50 lakhs should be seen only for the movable property. What value the movable property is attributable, for that only we should see the threshold limit. For movable assets value we should not consider. I am done with this section. Shall I move to other section? So section 194J, TDS on fee for professional services, technical services, etc. Fee for professional services, non-compete fees, exclusive rights, and director remuneration. TDS rate is 10%. Fee for technical services, royalty for cinematographic films, TDS rate is 20%. Threshold for both payments is 30,000. Meaning of professional services. Services related to legal, medical, engineering, architectural profession, and accountancy, technical consultancy, interior decoration, and other notified professions are considered as professional services. Then notified service for purpose of section 44A is film artist, company secretary, information technology professional, authorized representative, and professions notified for purpose of 194J, sportsperson, umpires, referee, coaches, trainers, team physicians, psychiatrists, event managers, commenters, anchors, and sports. This is all related to sports activity. And fee for technical services. Any sum paid to the following services like managerial services, technical services, consultancy services, provision of services of technical or other personnel are treated as fee for technical services. These two payments does not include in fee for technical services. Consideration for any construction, assemble mining project will attract 194C, and consideration which chargeable under its salary will attract 192. Shall I move on to other section?
Yes, Menaka.
Then up to this we saw in the deductor point of view. Now we're going to see in the deductee point of view. Our income will be, banker will deduct TDS on our income. The type two things is 194A and 194N. 194A is interest on TDS on interest other than interest on securities. Rate of TDS is 10%, and During this COVID, they made it to 0.75%. And deductor will be banking company. Threshold limit for time deposits alone 40,000, and in case of senior citizen it will be 50,000. Okay. Even when we are paying interest to the bankers, we may think it will be attracting TDS. No, it is specifically exempted. If payee is a banking company, cooperative land or mortgage bank, cooperative society, statutory corporation, LIC, company or cooperative society engaged in business, for these payees, there is no TDS obligation. So next section is 194N. This is a new section. The deductor will be bank, cooperative bank, post office. Threshold limit is if they're withdrawing a cash from one or more accounts for more than which account exceeds 1 crore. And TDS rate is 2%. Am I audible now?
Yes, Menaka, you're audible.
Deductor will be bank, cooperative bank, post office. Threshold limit tax is deductible if the aggregate payment from cash from one or more accounts exceeds 1 crore. A TDS rate is 2%. If you default in furnishing return of income for last 3 years to the banker, then they will be deducting TDS of 2% if it exceeds even 20 lakhs but within 1 crore, and 5% if it exceeds 1 crore. Okay, suppose if the deductee is not providing PAN to us now, we should deduct not on the rates which I now discussed in the previous section. We should be deducting in the following rates: rate prescribed in the relevant provision, higher of rate prescribed in the relevant provisions, and rate in force, and 20%. Mostly 20% will be the higher rate. So those who are not providing PAN to the deductor, they should deduct TDS at the rate of 20% for all payments. And due date for depositing the TDS to the government is for April to February, for 7th of the following month. For March alone, 30th of the April. For TDS deducted on purchase of property is, as I said before, 30 days from the end of month in which TDS is deducted. Then due date for filing returns for first quarter period April to June, 31st July. For the second quarter, 31st July to 30th September is 31st October. Third quarter, 1st October to 31st December is 31st January. Fourth quarter, 1st January to March is 31st May. But this financial year, these dates won't be applicable. Mostly they are extended up to 31st March. And various types of forms is Form 24Q for TDS on salary, Form 27Q for TDS on non-payment, for 26QB TDS on sale of property, for Form 26QC for TDS on rent. TDS certificates like Form 16 for those deducting TDS under salary, they should issue Form 16 on early basis. Those are deducting for non-salary payments, they should issue certificate to the deductee Form 16A on quarterly basis. Form 16B for TDS on sale of property, and Form 16C, TDS on rent. For this one, Form 16B and Form 16C should be issued on every transaction. After deducting every transaction, we should issue the certificate to the detective. Suppose we are delay in filing the return, the late fee will be 200 per day until your return is filed, and it will be with the minimum amount of TDS. If suppose we are paying TDS only for 10,000, the late fee will not cross 10,000. Then interest. If we didn't deduct the TDS, 1% per month. If we deducted but we didn't deposit the TDS, it is 1.5 per month. Penalty. Assessing officer may levy a penalty of 10,000, minimum 10,000. It may extend up to 1 lakh. And this is addition to late filing fee. This also covers in case of incorrect filing of TDS. Not only those who don't file the TDS also, and even those who made mistakes in filing TDS. For both assessees, assessing officer will levy this penalty. When there will be no penalty, the deducted TDS credited to the government, and late filing fees and interest is paid to the government, and TDS or TCS returns are filed 1 year before the due date, penalty will not be passed on us. Okay, now we'll see TDS violations. First consequences is if we violated TDS, assessing officer will declare assessee in default by passing an order under section 201. Second consequences is disallowances under section 40A as John sir was explaining in the morning. 30% of sum payable to the resident on which tax is deductible at source shall not be allowed as an application of income. 30% of the sum will be disallowed. Will not be treated as application of income. Then third consequences is penalty, as I discussed before, minimum 10,000 and maximum 1 lakh. Fourth consequences is interest. If we deducted the TDS 1%, if we didn't deduct the TDS 1%, if we deduct the TDS not remitted to the government 1.5% per month. And consequence number 5 is they'll put a charge on all assets. When tax is not being paid after it is deducted, amount of tax together with simple interest shall be charged upon all assets of the person. The assessing officer will put a charge on all assets. Then consequences 6 is prosecution for failure to pay tax. If person fails to pay tax to the credit of the central government, tax deducted at source by him as required by the provision will get punishable under rigorous imprisonment for a term not less than 3 months but may extend up to 7 years with fine. I completed
Thanks, Menaka. So if you have any questions in this particular session, please post them in the chat box.
I'm sorry. I made a mistake. I'm sorry. Okay, I've muted myself and been talking. Thank you. Sorry. Okay, what we will do is that, by the time they may type the questions, let's take, because we have 20 minutes time, we'll take some of those questions and then answer, and then we'll go. By the time they take the questions.
Okay, sir.
Yeah. Yeah, I'll take the first question. Okay, right. This is from Ashwin Kumar. Oh, you started sharing. Very good. Wonderful, Saravanan. Thank you so much. Please increase the font size also. Yeah, good. Okay, this is fine. That's nice. Thank you. Can we deduct TDS on salary in the last month of the financial year? Menaka talked to you, explained to you about average rate of taxes. And that average rate of taxes, TDS is to be deducted every month, starting from April onwards. And you'll have to do it till March. And Menaka also explained to you while deducting, supposing you made a shortfall in 1 month, subsequent month, you can adjust that. If you are remitting everything in the month of March or month of February, you will be paying interest for the rest of the month for which you are not deducted. So what it will be done is that supposing taxes to be deducted 12,000 rupees in a year, and you're expected to deduct every month 1,000 rupees. Failure to deduct taxes 1,000 rupees every month, you'll be asked to pay interest. Supposing deducted TDS are not remitted, it will be 1.5% as Menaka explained. You're not deducted at all, then it will be 1%. Okay. Menaka, you want to add anything more?
No, sir.
Okay, right. Thank you. If a person to whom amount is being paid is not a taxpayer, Menaka explained very clearly, it is not necessary the person to whom you are paying is not a taxpayer. Not only that, the person you are deducting and remitting tax is not also need not be a taxpayer. And when the amount attracts TDS, for example, you are making payment for construction of a contract, and the contract amount is only 30,000 rupees or single bill. Let's say whitewashing of one particular room, and the bill amount is 35,000 rupees. And if that's all his whole income for the mason, he is not having any other income. But unfortunately, you are required to direct taxes at source and remit to the government because the contract amount exceeds 30,000 rupees. When you do not deduct TDS, the contractor goes to the tax department. He files what is known as Form 13 with the tax department. All these are now online, and gets a certificate from the tax department saying that tax need not be deducted at source. Only such cases you need not deduct TDS. We'll have a typical problem for rent, TDS on rent. Okay, there may be an association, charitable organization, which might have taken a place on rent from you, or you may be paying tax, you may be a taxable, charitable organization whose income is exempt. Okay, right, and you may be renting their places for your program. For example, you are conducting a retreat, a summer retreat, for a large group of people, 3 days. And the total outgo is going to exceed 2.4 lakhs for rent. And food, it's going to exceed 50,000 rupees. When you need not deduct, the landlord, the organization which gives their place, they'll have to file Form 13 with the tax department and get the certificate saying that TDS need not be deducted. These days, tax department normally does not give. They say deduct TDS at 0.1% or 0.05%. Okay, right? Or 0.5%. 0.5% they may not. They may give at much lesser rate, and then they will say that you'll have to deduct TDS. So only upon production, only you need not deduct TDS. There may be cases where there is a tenant who may say, or a contractor who may say there is no need for you to deduct taxes, and he may produce a certificate. You need not deduct TDS from the date of that certificate. All previous payment you should deduct taxes at the rate specified by the Act. 0.75% or 1.5% or whatever rate Menaka has explained, you should do that. We pay honorarium of rupees 3,000 per month to a volunteer. Is it taxable? It's a little tricky question. Normally, it should be taxable because what type of services they are doing. If they are coming under professional or services, or if they are coming under technical services, they may not be qualified as a technical service. If they are coming under professional, then 10% TDS will be attracted. If they are not professional, okay, right, they are not definitely contract. Honorarium will not be covered under contract. If they are not a contract, then you do not worry about it, neither a professional. Do we have to file nil returns every quarter for TDS if there has been no payments? Preferably file nil return. Otherwise, you may get a notice. Okay. What is the percentage for contract under salaries? I mean, Menaka explained to you, there is no fixed rate for salaries because it is an average rate. She has put the slabs also. I mean, there are two regimes. One under the new regime, 115 BAC, if I'm right. Memory is right. Okay. The other one is the regular one, section 14 to 17, read with section 80C. And whichever the employee profess, based on which deducting TDS, and you should be calculating up to 5 lakhs, it is 5%, 5 to 10 lakhs, it is 20%, beyond 10 lakhs, it is 30%, if I'm right. Please correct me, Menaka, if I'm wrong.
Yes, sir.
Okay,
Existing
right.
regime is better.
Yeah, existing regime. And if their taxable income after all the deduction, let's say falls within between 5 and 10 lakhs, let's say 8 lakh rupees, for 5 lakhs will be deducting at 5%. The balance 3 lakhs will be deducting at 10%. On the total, we'll be deducting on 12 months, starting from April onwards. So we cannot say 1 minute. Since we pay stipend to college students and other part-time staff, which varies from 3,000 to 5,000, stipend is exempt from TDS. It's not an income. Let me make it plain. I think this is from Ashwini. Stipend to students, it's not a taxable income. It is exempt from taxes. So you need not deduct TDS on payment of stipend to students. Okay. The other part-time staff will possibly be covered under 194C or not 194C, 194J. Now to check whether they are coming under professionals and then do that. 194 has two types of rates, 0.75 and 2.5%. Can you explain? Menaka, can you explain so that I can take it forward? 194B.
I can take 194B, sir.
Okay, right. Because I don't think 194B is interest payment, right?
No, sir. 194B is not interest. 194A
is interest. 194 is interest. Okay. Anyway, we'll look at that. I don't think Menaka explained. If there is anything, then we'll get back to you. What is TDS on courier payments? For example, you are using professional couriers, okay, every month for all your couriers, or desk to DTDC, desk to desk couriers, okay, DTDC couriers, okay, you're using such couriers. Whatever courier you are using, postal department is exempt because they're government department, okay. And what you do is that you have a contract with them. Even the contract, Menaka did not explain, contract need not be written one. You don't need to have a regular contract. If you habitually use professional couriers, it can be different branches. And if the payment to them exceeds in a year 1 lakh rupees for payment, right, contract courier services, then you have to take TDS. Because single payment normally will not exceed for courier 30,000 rupees. And this is a contract, specifically given it is a contract 194C. And you should direct taxes on this. Right now, professional contract is, professional courier is a company. So for payment up to 31st March, it is 1.5%. After that, from April onwards, it will be 2% TDS. If you're having, in fact, now there are not many players. Earlier there were number of, courier services run by individuals also. As for the PAN card will give you, if the fourth digit is P, then you can presume it is individual. Any other digit, any other character in fourth digits, company, C it is company, A it is association of person, it could be society, T it is trust, okay, F it is firm, is the fourth digit, okay, right? If it is P, then it is individual, then if it is individual, it is 1.5% or 2% as the case may be. It was mentioned that no TDS is deducted if salary is below 2.5 lakhs per annum. Is that net income based on basic or DA? No, this is after claiming all your deductions. Menaka explained to you various deductions. Supposing the employee has constructed a house on loan or bought a flat on loan. If he has ATC deductions, like, he's paying insurance premium, his children are studying in school, tuition fees, okay, house construction loan, housing loan repayment. There are various other savings. So PF need not be EPF, it can be Public Provident Fund. There are various deductions possible. After all this deduction, 80C, Section 24, self-occupied house property, not the rented property. After all this deduction, if the net or the total income, use the word total income, not in net income, the total income is 2.5 lakh, then there is no TDS at all. Okay. Whether TDS should be deductible on refundable lease amount, this is a little tricky question. I really don't have much time to explain to you on this because lease, you're taking the property for a particular purposes, you're paying lump sum amount. So the TDS is possibly on the amount of rent that you'll be paying because there is an interest element available on that. Supposing you pay 10 lakhs for a place on lease, and where otherwise you'll be paying rent. The lease will come back to you, but there is an notional income on that. So you'll have to be looking at that point of view. So we will reply to this question little later. Okay. Is there other questions, Saravanan, on TDS or anything more?
The questions on TDS, sir. We have a separate set of questions from the first session, sir.
No, first sections we'll take it little later. Okay. But we still have 7 more minutes. Maybe some questions on the first set we will answer now, and then the rest we will take it later.
Okay, sir.
FCRA accounts opening form specimen needed. There is no specimen. There is actual FCRA account opening form. We will try to share it in the group. Already that is shared in the group. We have another very meaningful group where there's a lot of interaction going on, opening the bank accounts, because we did a webinar. It was a free webinar on opening bank account. Those of you who want to watch that on YouTube, you can request our admin team. They will share that link to you. You can watch that. 3 organizations have shared their experiences and they are actively helping others who want to open bank account. Right now, everybody is facing problem. Banks are not cooperating. I have given the contact numbers also. You can talk to them also. We will share that. Please contact our admin team, Mrs. Kamachi and Mrs. Sorry, suddenly the name went blank. Not able to think. Okay, so we will get, if you contact them, they will help you with this. Okay, right? Can fee from education exceed more than 20%? What do you mean by fee from education? What is our activity? Educational activity per se is not covered under the 6 limbs. I explained to you. 6 limbs. First is relief of the poor, education, yoga, medical relief, preservation of environment, preservation of monument, environmental activity monument, and then activities of any other object of public utility. If your educational activity is, if you're having educational activity, then this 20% ceiling does not apply to you at all. For example, you're running a nursery school, you're running a higher secondary school, you're running a Bible college, okay, right? Then this is not applicable at all. So other activities only will be covered under that. Okay, maybe after lunch we may have a little more clarity. Please clarify your question. We'll take it up in the afternoon. Would renting a hall or camp center come under income generating project? Normally, it should not come under income generating project because 11.5 talks about investing in immovable properties. I will share that slide, but consciously I am not including renting of immovable property, investing in immovable property, because investment is not for the sake of investment. Tax department questioning that. Normally, income from renting hall should not be an income generation project, but Camp Center can come under income generation project because there will be, thank you, there will be other income also, not just rent alone. There may be, food and other income also. It can come under that. Can you please let us know if we teach baking, can we sell the products to cover the cost? I'll explain to you, post lunch, this one. Question 4, please repeat to me. Presently, we are having 2 societies FCRA. Can we transfer fund from one society to sir? Oh, okay. Kindly highlight the question because there are so many questions. I am getting confused. Yeah, thank you. I've explained to you on Saturday, even within the organization, the same PAN, you're talking about 2 societies, which means that 2 different PAN number, FC funds should not be transferred. There is an absolute ban on that. There are organizations, single PAN, but 2 FCRA, still having it because in 1980s, when government made it mandatory, I think 84, when government made it mandatory for organization to register, everyone who applied got FCRA. Okay, right? I know organizations with single PAN, even now having multiple FCR registration. So, even that I am telling you do not transfer because they are talking about one person to another person. So that person they have not very clearly defined. The person definition includes individual, HUF, and association, including companies. So better not to do that. Whether fixed deposit is considered as application, a plain answer is no. But now under the amended or the proposed amendment, some part of fixed deposit can become application. Wait for the afternoon when I take on corpus donation. Okay, right. One more minute, I'll take this last question and we'll explain. Loan taken by trust should be included for income application purpose. I'm explaining this again to you today afternoon. I think we can wait for that. Income benefits to reach all. We have set different limits for each category of beneficiaries. It is acceptable. Can you please, in the chat box, give little more clarity on this? Because I am not getting, your questions correctly. Maybe if time permits, I will ask you to unmute and explain so that we will take it forward. Okay. I think this question again, we'll take it back. For this, I am closing the sessions now. We'll come back at 2:30 where I will take you forward the balance one. And then Ms. Monisha will take up post lunch, post tea some. And then again, I will have more presentation to cover. Thank you so much for patiently listening. I hope you have benefited from this session. And whatever your doubts and feedbacks, we'd love to get it from you. Okay. Thank you so much for listening. I'll keep this on for a few minutes. In case you want to put anything on the chat box, post lunch, there is a different link for you to join. Please use that link to join. Thank you. We'll be up at 25 itself, but we'll admit you by 2:30 because we need to set up the YouTube link also. Thank you so much. Thanks for joining us. Okay. I'm keeping this on, but I'm switching off my video on. I'm putting it on mute so that you can put your questions on the chat box. Okay. Thank you so much. Thank you.